Become a homeowner because property values go up, they say. Become a homeowner because tax deductions. Become a homeowner because why make your landlord rich? Look, the reality is you don't need to own your home to get many of these benefits. For one, real estate is not the only investment that goes up in value. And two, you can equally just buy a rental property, an investment property, still get tax deductions, still get property appreciation, and on top of that, become the landlord who's only getting rich. But there's still a lot of benefits to home ownership, and one huge one that hardly anyone is really talking about is Internal Revenue Code Section 121, which not only makes home ownership a great investment, but a great retirement tool. Let me explain coming up. All right, let's put this into context. Depending on your financial situation, if you buy a car and you sell it at a profit, you're paying taxes. If you buy stock in a company and you sell it at a profit, you're paying taxes. If you find your kid's old Pokemon cards and you sell them at a profit, you're paying taxes. Now, if you were to buy a house to live in like a homeowner and you sell it at a $250,000 profit, you, my friend, under Internal Revenue Code Section 121, if you qualify, you are not paying capital gains tax. Now, let's put that into context again. Let's say you buy an investment property, a rental property, as opposed to a primary residence. Well, now you don't qualify for Section 121, and if you were to sell this property at a $250,000 profit, accounting for federal taxes, state taxes, and a multitude of other factors, you could potentially be looking at paying over $50,000 in capital gains tax. Not paying taxes on a gain is a huge deal. It's an enormous tax benefit. Not even the popular 401k retirement plans that people so proudly flaunt around because of their tax benefits come even close to the tax benefit offered to homeowners under Internal Revenue Code Section 121. Section 121 can very well be the biggest tax break that most people can get their hands on. So how do you qualify? One, you must have owned and lived in the property for at least 2 of the last 5 years immediately prior to the sale. Number 2, the maximum gain or exemption on the gain is $250,000, and under certain circumstances, married couples can be bumped up to $500,000. Pros and cons of marriage, ladies. Pros and cons. And number 3, you can only claim the exemption once every 2 years, which technically also means you can claim the exemption more than once in your lifetime. Now, for my disclaimer, I am not an attorney, I am not a CPA, I am not a financial advisor. This is just a quick and chopped up summary of Internal Revenue Code Section 121 that definitely needs to be consulted with the appropriate professional. So keep your legal notices out of my inbox. So again, while you don't necessarily have to own your home to get many of the benefits of home ownership, there are still a lot of advantages to home ownership that are exclusive to home ownership. And one huge one is Internal Revenue Code Section 121, which not only makes home ownership a great investment, but a great retirement tool. My name's Daniel Rangel. I'm a real estate agent in Los Angeles. If I can be of any help, it would be an honor.